In the context of decentralized electricity delivery, DISCOs will play a pivotal role as facilitators.
It's important that the subsidiary DISCO that emerges from this transition must collaborate with the state government. There's no point reinventing the wheel. Electricity is very expensive.
Good afternoon, everyone. Welcome to this episode of What's with the Grid, a conversation with women who work in the power sector in the on-grid space. Today, we're going to be looking at the DISCO dimension to the Electricity Act. What does the Electricity Act of 2023 mean for the distribution subsector? We've heard a lot about the Act and what it means for subnational markets. We've heard a lot about what it means in other respects. We think that the voices of the DISCOs have been a bit muted. And to amplify those voices, we have Rahila Thomas, the Country Director, Energy Market and Rates Consultants, EMRC. Rahila has over 20 years of combined public and private sector experience in the power sector. She has an extensive knowledge of all aspects of the Nigeria electricity supply industry. And as Country Director of EMRC, she's leading and managing an interdisciplinary and dynamic team of consultants and associates that provide transaction advisory, industry-wide power market analysis, financial and techno-economic due diligence, tariff design, policy, and regulatory support. I think one of the things I actually stand and applaud Rahila for, I applaud her for everything, but this one, she was recently appointed as the chairperson of the special board constituted by the Nigerian Electricity Regulatory Commission for Kaduna Electricity Distribution Company. Of course, that's in addition to having served as technical advisor on the regulatory and transaction team of the Presidential Task Force on Power, and having held different technical advisory positions to 3 consecutive ministers for power in Nigeria. Wow. You're welcome, Rahila. It's a delight to have you here.
Thank you very much.
Well done,
Stella.
Rahila.
Thank you.
Right. And that voice you heard with a well done is Olajumoke Delano. I've had 2 people rush up to Jumoke while she was standing with me to say, can we get your autograph, please? We've heard you speak. Jumoke is an energy sector executive and a multi-jurisdictional lawyer. She's licensed to practice in Nigeria, the United Kingdom, and the state of New York. She has over 27 years experience working locally and overseas in various sectors, including legal practice, banking, energy, and infrastructure. Until very recently, she was part of the executive team at the Abuja Electric Distribution Company. Welcome once more, Jumoke.
Thank you, Stella. It's my pleasure to be here again. Hello, Rahila.
Hi, Jumoke. Good to see you.
Right. So we'll just go in for the deep dive. The Electricity Act, DISCOs. Rahila, when you hear that, what immediately comes to mind?
Well, a lot actually comes to mind when I hear that, the Electricity Act. I think one thing that jumps up to me is the transformational impact it has. The Electricity Act represents a significant shift in Nigeria's energy landscape since 1950, when the Electrical Corporation of Nigeria and the Niger Dams Authority were merged to establish the vertically integrated National Electrical Power Authority, NEPA, that will never go away because anytime there's no light, we scream NEPA, isn't it? So, since that time, this Electricity Act 2023 definitely represents a major shift from what we know the power sector. It aims to decentralize electricity generation and distribution, which will potentially enhance 2 things: energy access and reliability across the country. But more importantly, when harnessed productively in agriculture, healthcare, manufacturing, commercial services, and education, power will drive economic growth and improve living standards, which of course we know can tackle state problems such as poverty, insecurity, and unproductivity. Today, Nigeria, I would say it's like red alert. The insecurity in Nigeria is growing. We know that it's caused by a number of factors, such as low level of economic development, low agricultural productivity, climate change, poor law enforcement, and a weak presence of governance in low-income communities in rural areas where there's a lot of farming that happens. So most certainly, if this power can be harnessed in these different sectors, it will certainly drive the economy of every state, improving the lives of the citizens, and that would have a national impact, as it were. Given this decentralization, we already have 7 states that have gotten transition orders from NERC. And by the 22nd of next month, October, 3 of them, Enugu, Ondo, and Ekiti State, electricity markets should hopefully be up and running. So in terms of transformational impact, this is what I see when the Electricity Act comes to mind. Also, the focus on renewable energy is a good one. It emphasizes the integration of renewable energy sources, which aligns with global trends towards sustainability. This focus obviously will encourage DISCOs DISCOs being the electricity distribution companies, to explore innovative solutions that would incorporate more renewable energy into their portfolios. Already, we have NERC's recent directive for distribution companies to procure 5% of their partially contracted capacity. And well, partially contracted capacity is, I would say, the technical jargon, but all that is saying is that if we have 4,000 megawatts on the national grid, for example, there are portions that have been allocated to each of the distribution companies. We have 11 of them, so each one gets a percentage. So look at it as a cake, and every of the distribution companies have a piece of that cake in different quantities. So the idea is that 5% of whatever allocation has been made to each of them must come from embedded renewable energy power plants. Now, if you sum up all that, it amounts to about 192 megawatts, representing 5% of what the national grid wills today. So very important change, given that the former EPSRA didn't really have a robust provision for renewable energy. In the Electricity Act today, we have a situation whereby, or the provision that NERC will authorize or simplify licensing processes for renewable energy projects. It also will have NERC and the independent system operator to promote the distribution or supply of electricity from renewable energy sources. We're already seeing that anything that's renewable is prioritized on the national grid. So these are really the things. I mean, there's more. I'll start with that.
Okay. Thank you very much for that overview. There was something you said. I'd like to pick up on that. You said it's like a piece of cake, and each distribution company has a piece of that cake. My question is, are the distribution companies happy with this cake? Do they all like the flavor, the color, the texture of this cake? What are the challenges? As someone who's really sat at the very top of a disco, what kinds of challenges does this new law portend? Is everyone happy with the cake? Are they all happy with the slice, the size of it, the taste, the texture?
We often say, I remember, sometimes when we sit around and talk about power and the fact that you have such a big population with very small electricity being generated in terms of that actually goes through the grid to consumers. We say that a cake being split is trying to share poverty. So there's poverty of electricity that can be supplied, and to ensure that is equitable in a sense, there needs to be a portion of that applied to different regions in Nigeria. So there's a seemingly fair distribution of that electricity. So this has been the case from when the companies were privatized. I think the distribution companies, 10 years in their plate, they've come to understand that this is the part of the cake they have, and they have to make the best of it while making plans to increase that size so that more people gain access to this energy.
I see. The cake, Jumoke, what do you think?
So it depends, on, when you talk about the cake and if the discos are happy with it, I want to address 2 aspects of that cake. So the cake is being delivered to those who don't eat cake. So the cake is sometimes, or the quantity of cake, when they slice it, even within where the distribution company, is contracted to take this particular percentage, maybe a disco is expected to take 11%. So in delivering the cake to that disco, they are delivering too much cake to some people who don't eat, who are not that hungry for cake, and
they
too little cake to those who have a huge appetite for cake.
Oh, wow.
So that is one of the challenges that the distribution companies face, that, oh, yes, this cake, it is limited. So that's why you need to ration it. That's why I need to have a percentage. Even this percentage that I'm contracted to, I've signed an agreement to buy, I would like you to share this cake among my customers in a certain way. But the way the cake is being delivered is a challenge. Yeah. So just wanted to mention that, but I agree with Rahila that there is just so much opportunity, but thinking how to exploit those opportunities is what the distribution companies, need to do. Thank you.
So what kind of opportunities we heard Rahila talk about some of the states that would be, I think she mentioned Enugu, I think was it Ogun?
No.
Some of the states that
Ekiti.
actually, Ekiti, yeah, some of them are actually just forging ahead with the subnational markets. And so in terms of what that means for the distribution companies that operate within those vicinities, what in practical terms now, what does that mean? I don't know, Rahila, if you'd like to go first, and then Jumoke can come in.
I guess another way of putting your question is how do the discos fit into the decentralized electricity delivery context?
Absolutely.
I guess that's what you're speaking to. So what I'll say that in the context of decentralized electricity delivery, discos will play a pivotal role as facilitators of local energy solutions. They must adapt to models where they also engage with embedded independent power producers and mini grid operators and interconnected mini grids. I mean, before now, distribution companies have been very territorial in their franchise areas, not wanting to sort of open it up to other players to come in. But with this Electricity Act, and in the last 3 to 4 years, you have seen that more discos are open to having other players coming, IPPs, off-grid solutions, even within their network. So they should collaborate also with state governments and private investors to create localized energy solutions that meet specific community needs, because they have the data required to make these informed decisions. I believe that this sort of collaboration can enhance service delivery and also expand access to electricity in underserved areas. The shift obviously from a centralized market to a decentralized one where you have all states participate will require investment in technology and infrastructure to support distributed generation. It also will necessitate that discos rethink their business models. The Electricity Act today makes provision for franchising. It also makes provision for ring-fenced premium tariffs. And what does that mean? What that simply means is that a disco can carve out or ring-fence certain areas in their distribution network and provide better service or improved service or more hours of service for a premium. And that premium meaning because you're getting perhaps 24/7 electricity, then you will have to pay much more to cover for the investments that they have made to ensure that reliability in supply. So we expect that a lot of distribution companies, with this shift in the market landscape or regulatory landscape, that they will have to rethink new business models. This will enable them to maintain a key role within this shifting landscape. And finally, on my side, as they adapt to this new context, discos must ensure compliance with the regulator at the federal level, as well as that will spring up at the State Electricity Regulatory Commission, the guidelines, so that there are no punitive measures against them. That's the way I see the distribution companies fitting into this decentralized market. They must play a very critical role working with the state government in ensuring that the customers within that state, their needs are met in different ways. It won't be all size fits all. So they will need to carry out what, like know your customers and what they need, and looking at the investments that is required and those that we can partner with meet those different needs in different ways.
Okay, thank you very much for that, Rahila. That's very useful. For me, though, I mean, just playing a bit of the devil's advocate, for me, one of the things that I'm wondering is, so what will be different, right? Because from just interacting with other experts on the UKNAV program and power sector experts, there are two areas where it's like, so the discos have been found wanting, if I may use that terminology, that they haven't been able to fund development improvements to the network. And then the question of metering continues to be a challenge. So there's a new law now, and I hear you when you say, okay, they need to do A, B, and C, but So what will change with respect to these two areas where there's been problems, there's been conversations and discussions about the deficits and the problems. So what will change? Jumoke is looking at me somehow. Maybe she wants to. I don't know if those are daggers or if that's a loving look. I don't know what emoji you're wearing. But...
Okay, interesting thoughts. Just to piggyback on the previous discussion on the challenges, I think from the DISCO perspective, having worked with there, what I envisage is the challenges that the DISCO will need to get used to. For example, these 7 states who have shown an indication that they want to move to subnational markets. So they would now have to, in terms of changes, a new company must be created for every entity. Every state that has elected to move to a subnational, create its own subnational or state electricity market. So that a new company that is the assets, the liabilities, and the contractual obligations will be vested in that new company that is now expected to serve the state. So there will be a subsidiary DISCO, which is what is called in the Electricity Act. So there is the challenge of the separation, need for incorporation of this entity at the Corporate Affairs Commission, of course, the filing of the returns that come with it, and the other responsibilities that are associated with running that company. The other new thing a DISCO would have to contend with is 2 regulators. So whilst if they are buying any energy across the state borders, then they have to it's regulated by the federal regulator, the Nigeria Electricity Regulatory Commission. But for electricity transactions that fall within the confines of the state, then the state regulates. So there is a challenge which they have to get used to or streamline of multiple regulation. Also, we've talked about the company structures that they have. But the other thing is, what is this new state going to do? What kind of frameworks? So there's a bit of the fear of the unknown that, are they going to come and want to take over all the assets? Those assets, contractually, the distribution assets that were vested in the distribution company at privatization, by the time this subsidiary company is set up, they still belong to the subsidiary company. So the DISCO will be concerned that the state governments continue to recognize their ownership of those assets, and there is no, encroachment or, so those are the challenges, but there are also opportunities because now this subsidiary distribution company is taking care of the smaller area. There's also the potential for collaboration with the state government to develop the state. Now, in making laws, the lawmaking process in the states is easier than making laws at federal levels.
Really? How's that?
Yeah, because you just have the State House of Assembly. So the process of passing a law, if there is need, for example, electricity theft, vandalism, you need to amend your laws. The process you go to at the federal level is a lot longer, more complex than. So there are definitely, opportunities. I know the DISCOs are like, is there a threat? From the threat perspective is, are they going to create competing distribution companies, which is a possibility because even at privatization, no exclusivity really. There's no exclusivity in the documentation that vested those assets.
Okay.
So it's really an interesting times. It's important that the DISCO, the subsidiary DISCO that emerges from this transition, must collaborate with the state government. There's no point reinventing the wheel. Electricity is very expensive to generate, to transmit, to distribute. So it's an opportunity to leverage on existing assets to optimize. So there is so we say it's creating a new market, but it's a new old market because those electricity assets are still there, belonging to someone. So the states must recognize while finding ways to optimize the existing frameworks for the benefit for increased energy access, and security.
When you say optimize existing frameworks.
So what I mean is that instead of reinventing the wheel, for example, you have a DISCO that is in a state that has now transitioned to a state electricity market. Don't throw away the baby with the bathwater. So identify the bathwater that needs to be changed or needs to be, replaced. And then identify the positives, the baby don't throw away with the baby, but what can you build from what exists instead of trying to destroy everything and start all over again.
Okay.
Yes, that's what I mean.
Yeah, I mean,
Rahila, do you agree?
yes, I mean, I certainly agree with Jumoke that in the last 10 years post-privatization, a lot has been done. And for the states, they have the benefit of looking at how the federal government has, from the time of privatization to date, how they have regulated the sector, the kind of policies they've put in, what were the challenges, where were the problems, where they failed. And so it's a good time for a state to sit back and say that, you know what, we've seen how the federal government have struggled through this decade, the last decade, to develop power. We are going to do it perhaps in a different way, leveraging on the lessons learned from the last decade. Some of the uncertainties, just to add to some of the things that Jumoke has said, in this multi-tier market, and when we say multi-tier market, it's just essentially saying that you have the federal government, the federal or the center, which today is what we have, and then the second layer will be the state governments actually taking control and running the electricity markets. Now, there are uncertainties in this regards, and I think I look at it in like 6 buckets. One of that would be the applicability of a willing buyer, willing seller arrangement. And I guess we will talk later about what sort of market structure do they want to establish? How will trading happen? That needs to be determined at the state level to understand whether, I mean, you'd be surprised, there are some states that might say that they want to run a vertically integrated market like we have in ESCOM until today in South Africa, and it's working, although there are problems. There's issues around the applicability of subsidies. I read recently on a monthly basis, there's a subsidy exposure of about 181 billion naira. That is a lot of money. The states have to look at it vis-a-vis the FAC allocations they have. I ran some numbers earlier today for the 7 states that have been given the transition order to actually kick off their own markets. The combined federal allocation that they got in June, I used June numbers, was a total of about 77.7 billion. So 77 billion naira is what they got in July of this year. And if you look at
they got from where? Sorry, just for the sake of our listeners.
Sorry, the
federal that's okay.
Money that comes from the center to the states, shared every month for them to use to run their individual states. Now, 7 of the states that have received the transition order today, that being Edo State, Ekiti, Enugu, Imo, Kogi was the most recent one, Ondo and Oyo. When you aggregate or sum up the total FAC allocation to them in July, it came up to about 7.7 billion naira. Now, looking at the subsidy assumptions that the Regulatory Commission at the center have provided, they would need to expend or make provision for about 38% of that. So 38% of that 77 billion will be going to subsidies. Some states will have to put as much as 69% if they go down the line of, oh, I am going to subsidize my state. So applicability or application of subsidy and providing for it is something that the state will really need to look at critically, so that they are not in the same situation that we have today, whereby cash backing this subsidy provision is a problem at the center.
Yes, I actually wanted to ask, just because you raise a couple of really interesting points, but for me, the headline question is this. So there's a lot of excitement among the states in terms of just doing the transition to the subnational markets. But in a lot of the conversations I've listened in on, I'm not sure whether there's enough thought going into, so what is the design of the market? What are we going to do about subsidies? And some of the things you're talking about, there seems to be a focus on, oh, let's just do our law. Let's do our electricity law and policy. And that's what it means to have our own market. And then the investors will come rushing in. So I'm just wondering whether from where you sit, and this is for the both of you now, I mean, do you think there needs to be more attention paid to some of the things you're talking about? Because honestly, and this may be, I may be wrong, but this is my personal opinion. I don't think there's enough conversation going on. I'm not sure some of the states understand quite exactly what it is they're signing up for when they're asking for this, or when they make the move for this transition. It's almost like we have an electricity act. Yay, we have our own law and policy now. Yay, we can have our own subnational market. I'm just wondering whether there's enough of that going on.
Yeah, Stella, you're quite right, and you hit the nail on the head. A couple of days back, I was having a similar conversation, and someone was saying to me that the states, man, this looks very promising. You have, I think that was the day that Kogi got their own transition document from NERC, and it was like, oh wow, you're having more states take up this role. And people, the state seems to be running with it. Enugu, Ekiti, and Ondo, who are the three that will be running with their markets at the end of next month. Now, what I said to him was that the easiest part in this entire shift is writing the law. That's easy. You can pick up laws from anywhere, and most of the states are doing it. You pick up a law and say, okay, how can I adapt it to my own state? So writing a law is very, very easy. Putting up a policy, again, is tough. It's very easy. Now, the meat or the devil is in the detail of how you now operationalize what you have envisioned in that law that you have established, or the policy that is supposed to work with law to establish that kind of market. And you're right that I think there's all the talk and the excitement about the states, but really where we're going to see what will happen, or how this affects the way the states are going to go about it, is when they begin to operationalize it. And we'll see that firsthand with the three states. We'll see at the end of October on how they'll run. So like I said, all those uncertainties, I feel that those are the kind of things they must be looking at today, considering the liquidity crisis we have in Nexi today, and all that around subsidies, cost reflectivity. I mean, what sort of tariff methodology are the states going to adopt? I mean, for Lagos, for example, even if they have not started, I mean, they are kind of, I like what Lagos State has done so far. Lagos State is preparing everything, bits and pieces, they have their laws in draft, they have their policy, they have done their integrated resource planning, which is a very important document, because what that does is to identify the sort of resources you have, your resource advantage, I will put it that way, and how you're going to develop it. You want to establish the need or the demand of your people and how you're going to meet it. You're going to, talking about how generation, transmission, and distribution in the state to develop. All that is in the integrated resource planning. So Lagos State have done that, and they've also provided in the draft documents they have, which is public documents, that for them to start off the tariff methodology, they would rather adopt what exists, and then along the line, they'll make changes. I think that's a smart move to make. That, like I think Jumoke was saying, you don't have to reinvent the wheel. There's so much that has been done. All you need to do is take it up and say to yourself, okay, how best can I use this for the purpose of my state? So I think that the states need to focus on things around what the market structure will look like, what the subsidies are, even treating existing statutory liabilities. How is that going to be treated? How would you contract? What's the contracting framework for power procurement? All these are the things that will make the market work. So I'm looking forward to seeing how all this will play out. But we must always not, I know that in so many areas, people talk about, oh, they don't have capacity. Well, people develop capacity one day, and along the line.
Sometimes you learn by doing, actually. So.
Exactly, you have to learn by doing, and then you need as you go. So I think sometimes we need to cut them a bit of slack and see what happens to the states actually taking up this responsibility.
Yeah, I mean, the point about, to the extent that's possible, it will be very helpful to avoid reinventing the wheel and just leveraging what's been done. So for instance, I know that the UK now, for instance, has been on this IRP development process for quite some time, and they're looking at how they might even sort of like provide a standardized access to a sort of like a standardized template for subnational markets that would want to generate their own respective IRPs. But I have a question about the issue of cost reflectivity, which you talked about. Maybe Jumoke, maybe this is, I might pull you in here. It's been argued that from a disco lens, the Electricity Act has created an environment that allows for smaller pockets of financing to come into the energy sales space. Is that correct? And that would help with cost reflectivity and catalyze other things. Is that correct? Or do you agree?
So one of the interesting things in the Act, if I recall, that there's a provision even for the decoupling, the separation of the distribution licenses from pure distribution. What we have currently is sort of like a composite license, that incorporates sales and also incorporates wheeling of the energy from point A to point B. But with the Electricity Act, we have the provisions that permit a separation of those licenses into distribution licenses and sales licenses. So the Act already provides for that, though it is going to be triggered by NERC under the provisions of the Electricity Act. But apart from that, there's also the opportunity for trading. So at this point in time in the market, well, since privatization, we had Nigerian Bulk Electricity Trader, one entity. But in the last 2 years, I think we've seen that maybe about 10 or 11 trading licensees have come in. And Rahila mentioned willing buyer, willing seller being one of the key features of the Electricity Act. So yes, there's a real opportunity to explore the opportunities, explore what is available in terms of trading, in terms of sales of electricity, yes. But cost reflectivity, there is a link between, if the tariff is cost reflective, then it makes it easier for more people to come into the market, to invest in ventures that allow them to be traders or retailers of electricity with the appropriate licensing. But where the tariff is still not reflective, there's a continuing, challenge of what is the way out for me? For every investor or lender in a business venture is, how will I get my money back? What is my exit, strategy? What is the antecedents of the government, so far? Can I trust that if I put my money in here, I'll get it? I don't know if I've answered your question, Stella.
Not quite, but you do raise some other interesting issues. My question was is it correct to say that one of the things which the Act has done from a DISCO lens is to allow for smaller pockets of financing to come into the energy sales space? Or maybe I hear Rahila. Yeah.
Rahila, go ahead.
I would agree that has happened, because if you think about the fact that before now, there's no private sector financing of transmission assets. The major financiers for transmission development is the government and development agency or development partner funding for transmission infrastructure. But today we have the Electricity Act that has allowed for investment by private participants in transmission. So you and I can form a company and actually develop a business to own a transmission line. And that was never there in EPSRA. So for me, that is a way of attracting financing into the sector. And I think it also provides the required breather, or, so to speak, because it's government that funds transmission. So you have to go through the budgeting process, the disbursements and all that, and getting funding from development partners. There's a bureaucracy that comes with that. So now that you have private sector participation in transmission, we expect that the need to create or develop a much more robust transmission grid that would allow for intermittent generation, solar in this case, integrating solar into the power grid, you will need transmission to be quite robust. And every obviously has that opportunity now, given this decentralized landscape, to also attract financing for transmission. The other aspect that the Electricity Act provides that would attract financing will be in franchising. The distribution companies have struggled in the last decade to attract much needed finance or investment to reduce the losses and improve supply to customers. Now, the idea behind the franchising is that you can identify pockets within your franchising, ring fence it, and apply different models. So you can have a private sector or investor be interested in just coming to do billing and collection. They'll meter your customers in that area, they'll bill, and then they'll collect the money, and then there'll be a sharing formula between you and that entity. There are areas where you can ring fence, and what is required there is for you to augment the power supply to go there. So for example, today we have the 5 bands, the premium being band A, and then at the bottom we have band E with 4 hours of supply. So if you ring fence certain areas, let's say between band D and E, the idea is to bump them up to band C or band B or band A. For you to do that, you have to collaborate with investors that are happy to bring in that money, and also power developers to augment the power that is going there to increase that supply to 16 or 18 or 20 hours. So in that way, franchising, which the Electricity Act provides, has opened that door to attract the much needed capital to increase energy access to unserved and underserved areas. Also, I think when you started out, you talked about the need for, issue of cost reflectivity. Now, all this financing or investments that the Electricity Act has opened up and enhanced to come into the power sector, if you do not have cost reflectivity, then that money is not going to come. That capital is not going to come. And this is not tied to the quantity of supply. When you talk about cost reflectivity, you have to think about what makes up a tariff being cost reflective. Today, we have food inflation that is very high, hitting 40%. Now you ask yourself, what is pushing that? What is driving that? It is cost, both coming down to the issue of not having subsidies and PMS, being hiked to 1,000 per liter. Now that is a cost component that must pass through every good and every service that is provided. And electricity is part of that. So in electricity markets, when you talk about cost reflectivity, you have to think about the generation. What is the cost of the generation? What is the source? What's the technology? If it's solar, if it's hydro, if it's gas, there's a price to it. In Nigeria, over 70% of our electricity is from gas. So a big component of our cost structure is gas supply, gas feeding into the thermal plants to provide electricity.
So are you saying that wouldn't apply to the states then?
It will apply to the states. So these are the sort of, that which is why I talked about tariff methodology. What sort of tariff methodology do you want to apply? Is it going to be incentive driven? Is it just going to be flat? Do you want to have a uniform tariff across every area of your state? Do you want to disaggregate it? So these are the sort of conversations that need to be had.
Need to happen. But for me though, so sorry to jump in. For me, I have a question for the both of you, right? So you very helpfully laid out the case for what the state should be looking to do. And, you've also looked at these things also from a perspective of people who have sat high level within the distribution companies. My question for the both of you is this. There's so much that has happened at federal level that we didn't get right. And now it's like, okay, so the Electricity Act is here. It's this magic wand. But I hear a lot of ifs and whens in a lot of the things you've said. So if they do it and when they do this, and then everything, everything now fits in. So headline question, maybe trying to wrap up this really interesting conversation. What are some of the things mistakes that shouldn't be repeated, right? So what are the things we can learn from and not have happen all over again? If you were in a situation where you're advising a state with your disco lens on, what are some of the mistakes? Or you can even just mention one or two that you think we can just navigate and avoid, and just spare yourselves. What will those issues be?
Okay, so just to add a clarification to the previous question on investment in electricity networks and the fact that, yes, the new Electricity Act has allows private investment, ownership of transmission networks, but we find out that some of these things even already existed even before the act came. But what we see the Electricity Act doing is consolidating a lot of this in one document, and it does help. And also providing, more clarity on the opportunities that are available. And we learn as we go along. Even franchising existed before the Electricity Act. That guideline has about four potential business models, and one which is a hybrid that allows investors and the distribution companies to agree a framework model that works. So that's one of the things I see. They have existed before, but maybe the Electricity Act is now speaking specifically where it did not. But under next regulatory powers to make regulations, it had made regulations for investment in electricity networks, both transmission and other networks. It had made provisions for franchising. Now, for me, one of the very interesting story, I joined the power sector in 2015, and about 2 months after I joined, all the discos declared force majeure. So 11 discos submitted force majeure notices to BPE. And so you can imagine I was beginning to ask myself, did I make a wise decision? Coming to the distribution is just 2 months. Wow. My probation period is not even over, So it was a lot to think about. And what triggered the that force majeure, I believe, was the removal of collection losses. So there are investors. When you invite investors to come into a sector, when you create the framework, an enabling environment that attracts investors to come, it's a change of law provision for you to now change the dynamics of the game after they've come in. So that's one of the things I would advise these states who are going into the creation of subnational markets to do. You need to think through very well the framework that you want to develop to incentivize investment, to attract the bride to come. So it's not after you've lured the bride into the marriage now, then you start to change the terms. And I think one key area we can't repeat enough is the issue of tariffs. People are not investing because they want to do. They are not donating the funds. They want to earn a return, and they want an enabling environment. So I would say governments create an enabling environment that would attract investors, and that enabling environment includes a tariff that investors can see and, this enables me to earn a fair rate of return and to be able to exit. And so then don't change the rules after they come. Now, subsidies is totally within the rights of a government to decide if it wants to give subsidies, because you are government, that's what you do. But you need to really think it through, because the numbers add up. The thing about energy, those debts, they add up very quickly. So you want to get the best advice possible before, and in order to develop a tariff framework, which may include, if you want a subsidy, think ahead, how do you plan to pay it? If you give 10% subsidy, 20%, whatever, you need to be able to size the debt and your plans to be able to keep, your state afloat.
Okay. Thank you for that. So make sure you tell the bride the truth before you lure her in and she finds out that the car in the photograph was just a car you were posing beside and not your car. Goodness. Rahila.
Yeah, to the point you were making earlier, Jumoke, where you talked about the existence of all this, the franchising, the private capital for transmission, I think it's important to add that they all existed, but it didn't have legal backing. And why am I saying this? Because when NERC issued the franchising guidelines, at the time, a lot of the potential interested groups that came to talk about franchising, there was a lot of risk that this franchising model threw up. And sometimes as an investor, you want to ensure that all the legal and regulatory documents that supports an initiative or a model in a country, it's all in sync. So if at the time you looked at the franchising guideline and I opened up the EPSRA, there was nothing in EPSRA that supported franchising. So yes, it was there, but I think the Electricity Act has come to put that legal stamp on it that, we recognize that in law, and this law will protect your investment if you choose to come to the country and into the sector to, go the route of franchising. The same thing with transmission. Yes, you had independent transmission network provision, but again, there was no provision in EPSRA that supported.
So the EPSRA is the old law.
Electric power sector.
Yeah, just for the purpose, for the sake of our listeners.
Correct. EPSRA is the Electric Power Sector Reform Act. So it didn't really support. So like you said, Jumoke, it's consolidating everything, but I think more or less ensuring that investors have the required confidence in our law that it's provided for, it's provision for, and it's not just a regulatory instrument. As you know, NERC can get up tomorrow and make changes to that, throw it out or bring up something else. But with law, it's a longer process. So I think it has helped to boost the required confidence in all these different models that had existed. Now, to the point you made, Stella, on what lessons learned or things that the state should not do, I think Jumoke has focused on the key things, really, in terms of whatever design you have in place, you should stick to it. You should not change the rules when the game has started. And as we say, everything that has any cost, if there's any cost to any provision of service, then it must pass through to the end customers. I've always said that in the power sector, there are only two people that pay for electricity. It's either the customer pays or the government pays. So if a state should decide that they wish not to have all the cost of electricity pass through to the customers, then they need to be ready to make that subsidy provision. I think for me, the thing I would like to say as well, in terms of ensuring that the states start off on a very good footing, is the need to understand what they have. How much energy is going through your state as we speak from the national grid? How much is required? What's the demand in your state? What is the metering gap, for example? And how do I intend to meter people? Will every single customer in my state need a prepaid meter, a sophisticated meter? Should some rural areas on my grid remain there? I mean, will it make sense to ring fence some of those rural communities off the grid? And when I mean grid here, I'm talking about the 33 kV voltage. Do they need to be on that voltage level? Could I just work with the rural electrician projects for communities such as that, work with them and provide basic supply to them through solar provision? Do I need to do that? We talked about electric market structure. What sort of market structure or design should they have? That's very important.
But I want to put you on the spot, Rahila. Sorry, because that's what I do.
No
problem. One thing that happened at federal level that was a mistake that the states should not repeat.
Yeah.
Or one mistake that the discos have been making that they shouldn't repeat within the context of a subnational market. What would that be?
I think one mistake in terms of I'm thinking hard, because like I said, the things that Jumoke
or something that could be done better. Maybe we don't call it a mistake. It's something that could be done differently or done better.
I think is to, at the state level, the recognition must be made to the fact that supplying electricity must not be uniform.
Okay, what does that mean?
Ways. And what I mean by that is that, and again, coming from where I was what I was saying is that when a state determines its customer base, it needs to understand if they are underserved area, unserved area, what sort of business models will I apply? Now, at the center today, or how it is today, every disco has bundled services. All the discos have bundled services. And when I mean bundled services, they have the network that they manage and use to provide, and they have the retail business, the retail business of supplying that power. Now, at the state, to engender more competition, which we are not witnessing today in the centralized market, is to unbundle that service. Have your state distribution company focus on network in some areas of the state and open that network for suppliers to come and inject power in your network to meet the demand in that area. So I think that to engender more competition, which will ultimately be to the benefit of the customer in reduced prices, is to unbundle services at the state level. You have a distribution company focusing on the network and providing open access for suppliers to come. I think that would be a great shift from what we have to encourage much more suppliers and increasing or accelerating energy access, as it were.
Okay. So that's sorry to put you on the spot, but that was very helpful. I think at this point, this is a very interesting conversation, but we do need to call it a wrap. We probably need to have a part 2 of this. But just before we sign off, are there any famous last words? Anything that you absolutely need to say? If you can say it in a bullet, not in a paragraph.
For me, really, it's about the type of market structure. So for every state, when you do a law, you need to be crystal clear as to the type of market structure you want to adopt. Today, we're trying to move our central market to a bilateral system. How does the state want to start? It's an important question. And last two things would be any end-use customers allowed to buy supply from non-utility retail marketers, or is supply bundled with distribution services? Again, to the point of networks and supply. Can I, as a customer, buy power from anybody? This happens in the United Kingdom. If some
Can I do that?
You can't do that today. Unless you're an eligible customer.
Okay.
You can't. I can't, as a resident, just walk up to buy power directly. So the state needs to be clear on that. And finally,
so who needs to provide this clarity, though?
The states. The states
or the states. Okay.
Yeah, market structure has to be very clear. In
the market structure. Okay.
Yes, it will map out what that structure is so that you understand who is trading. As I said, an electric market structure describes the way that various market participants interact to produce and deliver electricity to the ultimate consumer. So the state must be crystal clear on this and ensuring that the distribution companies that will arise in their state also are not, undermined. So again, recognizing that you are inheriting a distribution company, it's coming with some liabilities, some obligations, ensuring that you're not just issuing licenses to independent distribution companies that will come and take from their market and undermine their ability to meet certain obligations that they have come to your state with. So I think that those will be my last, my advice.
Okay. I counted at least 20 bullets there. So
Okay. Okay, great discussion, Rahila, this afternoon. And I would say, when a new movie comes out, when you hear when they're advertising the movies, they coming soon, to a cinema near you. So the discos need, to be mindful that coming soon.
Movie.
Yes.
Oh, gosh.
That coming soon, state electricity market is coming soon.
Is it a horror movie or is it a love story?
I don't do horror movies. I don't do horror movies.
What movie should they prepare for?
So they need to be prepared.
Rahila, you were saying?
I said, hopefully it's not horror. We are praying that it's not horror.
Hopefully not horror. Okay.
So I would like to emphasize the idea of collaboration because the state government brings its own strengths. The existing distribution companies also bring their own strengths. And it is important for strengths to pull together. There is not us against them. It's an opportunity to create a market structure that works, an efficient market structure, and that is going to require accountability. Now, accountability on the side of the government, on the side of the existing players in the market. We all must get ready to get our hands dirty and do what is required in order to increase energy access, for the states, as they decide to move into this new, not so new regime. Thank you.
Thank you. Okay. And on that note, we will pause this episode, the Disco Perspective, around the Electricity Act, with a very big thank you to our guests, two very smart, very super intelligent executives in the power space, Jumoke and Rahila. Thank you so very much for being here.
Thank you for having us. Thank you.
Thank you for having us. It was a pleasure.
And just to say thank you also to the Next Year team, the team who's organizing and who's going to sort out the recording and who've been giving us all the signals and making sure our headphones are working well. Thank you so much, everyone. And to our audience, thank you for listening, and join us next time for another episode of What's with the Grid, a conversation with women in Nigeria's power sector. Thank you, everyone, and have a good rest of the day. Bye.